The U.S. taxes its citizens on a worldwide basis. You have to include income that's earned through those foreign assets.
Hello, and welcome to another episode of It Depends, a podcast series brought to you by Hanseman Weeble. You know that if you've ever talked to an accountant, they've told you, well, it depends. This podcast series is for business owners, leaders, operators, accountants, or someone just wanting to learn more about the accounting industry. I'm your host, Clarissa Hoffman. Today, we are joined by Faye Perillo, who is a manager in our tax department. Thanks for joining us, Faye.
Thank you for having me.
Can you tell us a little bit about yourself?
Yes, I've been with a firm for 17 years now, and I was in the audit department for 2.5 years and then moved to the tax department, and I've been here since.
So today, you're going to talk to us about international tax. That can mean a lot of different things. It's a very broad topic. Within Hanseman Weeble, what does our international tax practice look like?
So it includes U.S. persons who hold financial assets, basically some bank accounts in foreign countries. When I say U.S. persons, they could be U.S. citizens or U.S. residents. It could also include some entities like corporations who hold assets outside the U.S. as well. And when I say hold, they could either be the owners of these assets, and it could also mean they hold a financial interest or a signature authority over these assets that are outside the U.S.
So very wide-ranging.
Very wide-ranging. And when I say assets, the most common ones that we see are bank accounts, but it could also mean investments. It could also mean things like pension accounts outside the U.S. It could mean investments in foreign partnerships or investments in foreign corporations. Even some rental entities that are outside the U.S. as well.
We've talked a little bit about it, but what are some of the tax filing requirements for U.S. persons holding foreign assets?
Aside from the regular 1040, they also need to file the FBAR, which is the Foreign Bank and Other Financial Accounts Report, which is a yearly report that they have to file electronically. And it's basically a declaration of the assets that they have ownership on and financial signature authority on. So they have to report that if the account reaches a threshold of $10,000 at any point during the year. So even if that means they deposited money or transferred money into the account one day and then turned around and withdrew it the next day, then as long as it reached $10,000 threshold, there is a reporting requirement. And that is outside their regular tax return.
What are some of the other informational returns that might be required for a U.S. person holding foreign assets or receiving foreign income?
Right. So there is another form that is actually included within their regular tax return. This is called the Form 8938, which could include other assets, not just bank accounts. So it could include investments, pensions, and that also reports income generated from those accounts because, like I mentioned earlier, the U.S. taxes its citizens on a worldwide basis. You have to include income that's earned through those foreign assets. And other things could be investments in foreign partnerships. So you have to report that on a Form 8865. Or if you have an investment in a foreign corporation, so that goes on a Form 5471. Now, these forms are all informational. Unless they're earning some sort of income, then that is taxable. But generally, if you're just declaring to the IRS, these are the assets that I hold, you just include that on your regular tax return. But it's very important that you include them. There are penalties that are involved if you don't include them or if you don't report them.
Why is it important to be aware of these filing requirements?
Yeah, it's very important to be aware because even though these forms are informational, you're basically just declaring to the IRS that I own these assets outside of the U.S. If you don't do it, though, the IRS could assess penalties that are pretty steep. And to pay those types of penalties on a form that's really an informational form, it can be a very dangerous position to be in.
What are some options available for taxpayers who have failed to file these informational forms?
For taxpayers who may not know that they have those filing requirements, they could, first of all, amend their tax return and include them. They could still get penalized, but then it would straighten their records out with the IRS. They could file delinquent FBARs, and you just give the IRS your reasons why you failed to file that portion of your tax return. Or there is what we call the foreign offshore procedures that the IRS has set out for taxpayers who missed filing these forms but did not intend to do so. So it has to be non-willful. They could go through this procedure. Basically, it's a self-reporting tool. And what they need to do is either, if they have not filed tax returns before, they file tax returns, or if they did file but they forgot to include these foreign forms, they just need to send in amended tax returns for the past 3 years, and then they just need to submit 6 years worth of FBARs that they missed reporting. They put that all in one packet. There is a small offshore penalty that they have to pay, but it's much better and it's less than that $10,000 an account. And they put that all in one packet, submitted to the IRS, and basically telling the IRS that none of this was willful. And that should give them a clean slate with the IRS with regards to these foreign filings. Our international tax practice also includes non-U.S. persons who have some sort of connection to the U.S., meaning they have an investment here, or they do business here, or they have property in the U.S. that's generating some sort of income. And in that case, they would just need to file and pay taxes on activity that's connected to the U.S. It's not going to be worldwide. And we do see some of those, and we're able to help them file the proper return depending on whether they're an individual or if it's an entity that has some sort of U.S. activity.
Probably a more common scenario that we see is that a U.S. company engages with a foreign person or company to perform a service. What are the reporting requirements associated with that for the U.S. business or individual?
A U.S. entity that pays foreign contractors are actually required to withhold taxes. They're going to be the ones submitting the money that they withheld to the IRS, and then they are required to send a withholding form. Basically, it's called a 1042, which is an equivalent to a 1099, and that just allows the foreign individual to report that income and use that withholding when they file here in the U.S. So that is a requirement for U.S. entities who pay foreign persons for certain services.
Well, thank you so much for sharing your insights on international tax with us, Faye. Certainly with the potential for penalties, this is not something that individuals should take lightly, and you're a great resource in providing information for us.
Thank you for having me. And what's your next topic going to be?
Well, it depends.